Hello family, thank you for tuning into this video today. Hey look, over the course of the last 12 months, I've done a series of videos now where I've dissected certain suburbs that are across regional Queensland that are performing very good from a capital growth point of view. Now in this video, I wanted to do something different, is take a look at the rental side of the market. So what are some of the hottest suburbs right now in regional Queensland when it comes to rents and rising rents? So we're going to deep dive today into 6 suburbs across regional Queensland from Bundaberg all the way through to Townsville and dissect this list to see what's going on in these certain suburbs that's causing such accelerated rental growth. And I suppose if you are an investor, the question is whether or not there is potential opportunity here to go in and invest in a suburb like this to capitalize on these rising rents. So again, thank you for tuning in today, and I hope you get some value out of what's on offer here. Okay, if you are a current subscriber, welcome back and thank you again for tuning in today. If you are new to the channel and watching my content for the first time, my name is Troy Bassini. Now, I am the owner and head of research of Life Buyers Agency. So Life Buyers Agency is a regional Queensland buyers agent where we have 2 subsidiary brands that services different regions across Queensland. So we've got Tropical Life up in North Queensland servicing Cairns, Townsville and the surrounding area. You can see those details there. And then we've got Capricorn Life servicing the central Queensland basin, which includes Bundaberg, Gladstone, Rockhampton, and Mackay. And look, guys, yeah, we help a lot of investors, we help a lot of home buyers navigate the regional Queensland property market. We've been around 6 odd years. We've done more than $200 million worth of transaction volume across the marketplace. We do a large portion of our transactions off market as well. I'd say close to 70% of all our deals are off market, and then we buy. As a result of that, I suppose we get a lot of stuff in isolation of competition and have a tendency to get most of our transactions under market value as well. But look, guys, our service isn't for everyone. But if you feel as though you have synergy with, I suppose, what we might have on offer, which is to help you navigate the marketplace, help buy the better assets in the market, get access to off-market deals, and get you into the market sooner, feel free to reach out to me and the team here. You can give us a call on that number, visit us on those websites, and yeah, book in a consult with me or one of my team members, and we can potentially start the journey from there. All right, as I said earlier, we're going to dive in and take a look at 6 suburbs now across regional Queensland that have had the fastest growing median rents over the last 12 months. And I suppose what we want to do today is just take a peek behind the curtain as to, what's going on in this suburb and why the rents have accelerated the way they have over the last 12 months, and have a look at whether or not there might be still an opportunity for you to potentially buy here if you are an investor and capitalize on some of these growing rents and potentially juicy yields. So the first suburb here is Allenstown. It's a suburb located on the south side of Rockhampton. And I will say Allenstown will be predominantly known as more of a blue collar suburb with a section of commercial, light industrial, and some lower socioeconomic demographic there as well. But it intersects with the Range, and the Range is one of the more upmarket suburbs in Rockhampton. So from a location point of view, it's actually quite well located overall. So we can see here that the median rent for Allenstown is $403 per week. And over the course of the last 12 months, rents have grown 12.8% in Allenstown from $365 per week to $403 per week, resulting in an average resulting in an increase of $38 in total over the course of the last 12 months. So yeah, huge growth here, guys, in Allenstown, coming in with double-digit figures here. And if you take a look behind the curtain as to what's driving that, you can see here that properties don't last very long when they go up for rent in the marketplace. Most of them last around 17 days on average, which is a good thing. So if you were to buy in this market, your property's not there sitting too long in the marketplace before it gets rented. So you're not burning cash there. So that's a good thing. And obviously that playing a factor into why this rents are growing. We can see here that online search rates are okay. Not exactly high. I'd probably say they're well and truly below average. And it's more indicative numbers anyway, these online search rates. But it just goes to show there's roughly 80 unique renters looking per listing. So every listing that goes online on domain or realestate.com for rent, there's roughly 80 people clicking on them and potentially submitting applications for these various properties. We can see here that if you were to invest in this suburb, what that would mean in terms of how many dwellings overall there are being rented. And obviously, the more the more dwellings that are being rented means for you as an investor, there's more potential competition in the suburb if you were to hold an asset here. So we can see here that 48% of all the dwellings, which is about 1,700 unique dwellings in the suburb, are actually rental properties. So there's a high portion of active investors here right now. Probably for my liking, I generally like to keep that under 30%. When it's generally sitting up around 50% like this, it just goes to show that there are probably a bit too many investors active in the suburb and probably a bit too much competition, I would say here. But again, I suppose if you are looking to buy in the suburb, just treat, every asset on a case-by-case basis. And I think if you can nail the pockets and the streets, you're probably going to buffer yourself away from where the large clustering of rental stock is. And I would say the large majority of the rental stock tends to be in the pocket where Allenstown intersects with the Rockhampton CBD. You got a lot of sort of median density units and apartments around there where there is a lot of those properties being investor owned. So just something to be mindful of, guys, of is that investor percentage, because that is additional competition and it could potentially deprive you in the future from you getting really good rental returns. We can see here that the vacancy rate currently sits at 0.8%, and that equates to roughly 3 listings currently available here. So a very low supply environment with these vacancy rates. Obviously, the vacancy rates, the lower they are, that tends to then put upward pressure on these rents. So to only have 3 properties available for rent right now out of a big dwelling pool just goes to show how tight this rental market is, and that's definitely been attributed to the fact that this median rent has been rising over the last 12 months and doing these double-digit figures. Now we can see here that over the last 12 months, the median house price has also been rising as well, 13.3%, and the median house price currently sitting at $430 per week. And based on that median rent and median house price, the average investor could get a rental yield of about 4.8% there. So those yields aren't exactly knocking anyone's socks off. I think overall, you just got to be mindful that this is the median rent here and the median house price. I know there are properties right now in Allenstown that could rent upwards of $600 per week if you nail the street and the pocket. So you can potentially get way better rental yields than that. So look, overall, we get to see this suburb here, behind the curtains and what's really been driving the rental market forward here over the last 12 months. Do I think there's still opportunity here for this rental market to continue to grow? And then would that, as a result, continue to push up the median house price as well? Currently at $403 per week, I think the rental market here can certainly keep growing. I think it could easily get to $500 per week over the next 24 months. And I think that's only going to make your yields better, providing the median house price isn't accelerating away too much. But I think there's still plenty of median rental growth in this suburb, and I think the house price sitting at $430,000 as well right now, I think has a lot of wiggle room to even push up around that $530,000 over the next 24 months as well. I'm not necessarily buying in Allenstown right now. I think there's better value suburbs across regional Queensland right now, but yeah, just be mindful if you are to invest here of that. Again, that investor percentage, it does have a high portion of investors active in the suburb, and that can be quite problematic for you overall. But yeah, that's sort of an analysis right now on what's going on in Allenstown and why that median rent has done double-digit growth over the last 12 months. Number 2 is Branyan, and Branyan is located in Bundaberg and is on Bundaberg's north side. So it's one of the biggest suburbs in Bundaberg and located on the north side of the Burnett River, roughly, I would say, a 10-minute drive into the Bundaberg CBD. And look, Branyan is predominantly made up of residential and rural residential properties, and I would say for the most part middle class and upper middle class demographic. Like there's this thing in Bundaberg where you're either north side or you're not. So what we find in and around Branyan is a lot of the people that tend to live in the north side of Branyan tend to be north side of Bundaberg tend to be in Branyan, and Branyan also caters for, as I said, that rural residential living. So a lot of the farming families have a tendency to have Branyan as their base if a lot of their farms are on the north side of the Burnett River, or people that are working in a lot of those big farms on the north side of the Burnett River have a tendency to be also based in and around where Branyan is. So yeah, Branyan, quite a nice suburb in Bundaberg. So we can see here that the median rental price for Branyan is currently $611 per week. And over the last 12 months, we've seen this median rent grow by 12.9% from $548 per week to now $611 per week, resulting in a total increase of $63 per week in Branyan. So yep, some really big growth here, some double-digit figures in Branyan. I'm not really surprised to see this double-digit growth. As I said, it's quite a nice suburb within Bundaberg, and it really caters to that middle class and upper middle class demographic. So I can see why rents have been going up there in that suburb. And if we have a look behind the curtain here, we can see some of the data which is really attributed to this rising rent over the last 12 months. So on average, most properties take roughly 14 days before they're leased there. When most properties go on realestate.com or Domain, they have roughly 257 eyeballs on them per listing. So it has a really high search rate here, particularly when compared to Allenstown just before, sitting around 80, 90. This has 2-3 times that amount. So it just goes to show that there is a lot of rental demand here, people looking online for properties for rent in this suburb. We can see that here that only 18% of the dwellings in this suburb are rental properties, and this is out of a total dwelling pool of 1,989 properties. And this is a great figure, guys, to see it well under 30%. It's a good thing, particularly if you are going to be buying in here as an investor. There's very little rental competition here, and that's a good thing, and to see that most of the properties or dwellings are owned by owner occupiers. So I think going forward, as I said, your property is subject to less competition, and that less competition could mean better rental returns or premium rental returns over the short, medium, and long term. So that's a good thing for Branyan, guys. The vacancy rate currently sitting at 0.9%, only 4 listings in total. So very, very tight rental market here, and 4 properties available out of a potential pool of 1,900 properties available. So look, that's as tight as it gets, right? That's as tight as it gets, and you can see definitely why that rental price per week has done what it has over the last 12 months here. And we can see here that the median house price has seen a 10.6% growth rate over the last 12 months, and it's currently sitting at $677,000 for the median house in Branyan. And we can see here, based on that rental yield, based on the median rent per week and the purchase price of $677, you'd get a rental yield or return sitting at roughly 4.6%. So that rental yield is not that high, guys. But in saying that, you can potentially get better returns if you got properties for rent a little bit more higher than that 611. I'd say most properties there, particularly if you target the well located 422s on roughly 600-700 square meters, you'll be looking at anywhere between $600 to $700 per week. I haven't seen the market necessarily break through that $700 per week in Branyan unless it's more executive style construction. So I would say the yields are kind of what they are now. And in terms of like the house price of 677, I would say you could still get a 422 brick property on 600 square meters under 650. So there is still some good buying opportunity in and around Branyan. And I would say you could probably get something with a 5 in front of it, but it might most likely would be a 3-bedroom, 1-bathroom, or a 3-bedroom, 2-bathroom. And looking at these rents, like if the average right now is sitting at $600 per week, I think Branyan, as I said before, does cater to the middle class and upper middle class. So I can see this median rent pushing up even to 800 over the next 24 months, because I think it has the demographic there to sustain ongoing rental growth. And then in terms of the median house price, like sitting at 677, I would say it would be the top end of the market right now. Do I see it moving any more than that? I think if you can buy under that median house price and target, as I said before, those $600,000 properties within the suburb, I think a lot of them have that wiggle room to push up to that 700,000. And then obviously those executive style homes that are around that $700,000 price point, if you can get those ones on an acre or so, they tend to rent really well, but I think they will also have the ability to push up over time as well. But buying in and around that 677 and getting the typical 611 rent, I don't think that's the right move to make potentially in a suburb like this if you're looking to potentially invest in somewhere like Branyan. But yeah, guys, that's kind of a peek behind the curtains as to what's going on in Branyan, and I do think there's opportunity here for rental growth, and I do think there's opportunity here to make money in terms of capital growth. But if you stick under 650, I think. So we've seen a suburb in Rockhampton, we've seen a suburb in Bundaberg, and now we're up in North Queensland in Townsville at a suburb called Gulliver. So Gulliver, I would say, is right in the smack bang middle of Townsville amongst all the action. It's one of the more older established suburbs, and I would say predominantly blue collar type suburb with a cross section of lower socio-economic demographic there, sort of spread throughout it as well. So it's done some really huge numbers as well over the last 12 months in terms of its median rental growth. So we can see here that the median rental price currently in Gulliver is $452 per week, and over the last 12 months it's grown by 13.8% from $402 to what it is now at $452. So a total growth of $50 per week. So look, Townsville, it's everyone's buying in Townsville right now. It's a really hot market. There's a lot going on there. So, this is, playing into the wider story or the bigger story around Townsville and how it's performing right now. Gulliver is one of many suburbs in Townsville that is also growing in terms of capital growth, but it's good to see these rents are rising at such a high pace now as well, because I've always seen Townsville as one of those markets that is still, I'd say, 18 to 20 months away from potentially being sort of ripe for investment, where you can get that good combination of rental yield and house price. Whereas right now, I think you can get the good house price, but you can't get the good rental yield. And I think Townsville started to move into that sweet spot now as rents continue to rise. So $452 per week, still a relatively affordable market there. So again, it's more of that blue collar, lower socioeconomic suburb. So at this rental price of $452 per week, I still think, that has a little bit more wiggle room to keep pushing up. I think that blue collar, lower socioeconomic demographic will start to taper off when rents get to around that 525 $40 a week. So I think it still has another $50, $60, $70 worth of growth in it. And look, we can see here that over the last 12 months, it's done some good numbers. But if you look at some of this point in time data, you can see as to why that's been the case. So most properties are rented here in roughly 20 days, which is good. So really short turnaround time there. So you've got very little time on market, which is a good thing. So you can get cash flows through the door straight away. There's roughly 129 unique views per listing. So on realestate.com and domain, it does have high search rates, which shows really good market depth there. Roughly 33% of all the dwellings in the suburb are rental dwellings. So from that point of view, I think it's definitely right on that sweet spot of around 30%. I think that's quite a nice, healthy balance where the remaining 70% of the stock there is owned by owner-occupiers. And if you actually look at the total amount of dwellings in the suburb, you can see there's only 447 dwellings in the suburb. So it's not a huge suburb. It's quite a small built-up suburb, sort of smack bang in the middle of Townsville as well. So that would mean a lot less sort of overall rental supply when that suburb is so small as well. And you can see here vacancy rate sitting at 1%. So there's a total of 7 listings currently available for rent right now. So overall, that vacancy rate is quite tight right now at this point in time, and only have 7 listings currently available. And obviously, if it maintains that trend and continues to maintain that trend over the next 12 months, we're going to start to see this rental price continue to move further up as well. So yeah, that's definitely been attributed to the fact that this median rent has been rising. Those tight vacancy rates, so supply is tight there all around. We can see here from a median house price point of view, so the house price is also soared in conjunction with the rents by a total of 22.4% over the last 12 months, and its median house price currently sits at $447,000. Look, that's still a quite an affordable market when compared to Townsville right now. I think suburbs like Gulliver still offer a lot of good value for money because a lot of the other more blue chip locations around Townsville have pushed up to around that mid fives to 600s now, and I think places like Gulliver, Cranbrook, Heatley offer good value for money. These older established suburbs clustered around the inner part of Townsville, and they're often in these larger block sizes as well, with sort of good frontage, good side access, particularly if you are someone that wants to renovate, develop, flip, or even put in granny flats. So I think these suburbs have a lot to offer around that sort of point of view or that sort of strategy in and around Townsville. So yeah, look, 477, it's done some huge growth, and I think it's got more wiggle room to push up around that. I think 550 mark as well over the next sort of 24 months. I still think there's opportunity for you as an investor to make money here from a capital growth point of view and continue to get growing rents as well at the same time. And we can see here that those yields based on the purchase price currently sit at around 5.2. So yeah, quite good rents relative to that purchase price there. So those yields are okay, but again, if you are buying in towns, you're just going to be mindful of some of these yields have a tendency to get eroded away pretty fast by some of those holding costs, because insurance costs a little bit more, council rate costs a little bit more, obviously letting fees cost a little bit more, management fees, etc. So they tend to eat into your yield quite a fair bit in comparison to other regional areas. So you have to be mindful of that when you're navigating the Townsville market. And what I find in Townsville right now, if you're buying something with an established tenant in there, so a tenant that's been locked into a lease already, what you'll find is that lease is probably 20-30% under where the market should be right now. So you need to find a way to try and get that rent up as soon as possible to market-based rent. So I think over maybe one or two rental increases over the next 2 years, you might be able to get there. So that tends to be quite an issue if you're trying to buy and hold, and you've got to take that hit for the first 2 years. So I don't think buying something in Townsville with an established tenant is probably the right move. If you buy something vacant and you can get market-based rent straight away, I think you will do just fine, and you'll get more buffer or more fat in that yield there. So you can hold the property a little bit better in the short term. But yeah, guys, that's Gulliver, and it's done some really good double-digit growth in rents over the last 12 months. Now moving south down to Mackay to a suburb called Slade Point. So if you don't know where Slade Point is, it's in the, I suppose, northern beaches section of Mackay. And I would say for the most part, well, historically, it's been more of a blue collar, lower socioeconomic area, but I think it's diversified a lot over the last sort of 10 to 15 years. And I think it's more moved into sort of middle class suburb, and it's starting to gentrify even to some of the more well-located pockets in Slade Point to upper middle class, where some really nice stock is, and some upper middle class demographic are sort of clustered around. So we can see here that in Slade Point, the median rental price is currently $541 per week, and over the last 12 months, it's grown by 17.1% from $466 to $541 currently, resulting in a total increase of $75. So Slade Point, Mackay doing some huge numbers here. 17.1. That is phenomenal growth we've seen here in this market. And as I said before, I think it's playing to the fact that I think Slade Point has been one of the more affordable areas over the years, and I think people just see great value for money in and around Slade Point, and I really think that's played a part in pushing that median rent up, and also that median house price up, I think, over time as well, because it's just well located in comparison to sort of proximity into the CBD. It's very close to the beach as well. It's got some really good public amenity around there as well, shops, restaurants, cafes, parkland. So I think a lot of families are now starting to see Slade Point as a pretty good option now to rent and to live. So I think that's really put upward pressure on these rents. But if you look at some of the data here, so Slade Point, most of the stuff gets rented there in roughly 17 days. So that's a good thing, a very short turnaround time there. Most stuff that goes onto the market has roughly around 124 unique views per listing. So there's some really strong market depth there as well. In terms of rental competition, it's sitting around that sweet spot of around 31 dwellings are rented. 31% of dwellings are investor owned or rental properties. So I think that's a quite a healthy amount. I don't like to see anything more than 30%. And the suburb tends to be quite stable overall then as well, because you're buffered from that owner occupier percentage there of around 80%, 70%, which is really, really good. And it has roughly around 1,700 unique dwellings in the suburb as well. So it's one of the more bigger suburbs across Mackay as well. And yes, 31% of them are investor owned. So very low competition, which is good. From a vacancy rate point of view, it's currently sitting at 1.1%. So not exactly sitting under 1%. I'd probably like it to be a little bit tighter than that, but overall, that only equates to roughly 11 listings right now. So it's a pretty tight rental market overall in terms of supply. So look, Mackay has a lot going on right now. A lot of people moving into the area, a lot of infrastructure spend, a lot of population movements. The market's red hot. So I think all round, from a supply point of view, anything around that 1% or under, I think that's still a very healthy trend. And I think if it remains around that sort of 1%, I think we can continue to see upward pressure on these median rents. So sitting at $541 per week. As I said, I think there's been a transition in Slade Point from blue collar to now predominantly middle class. And I think that middle class demographic in Mackay, we've seen it in other suburbs and its neighbouring suburbs, where the middle class are clustered, they can pay upwards of around $750 per week rent. So 600 tends to be the norm, but they have the ability to pay more than 750. So if the middle class is growing in Slade Point, I think this median rent can push up to around 650, 700, I think, over the next 24 months. Definitely. Obviously, you got to treat this on a case-by-case basis, per property basis, per street basis, but I do think there's wiggle room and scope here for this median rent to grow. And I think as these more expensive suburbs move up with their median rents, I think Slade Point in Mackay will start to sort of move incrementally, and it'll be kind of like the bridesmaid place to rent because it's affordable. So if its neighbouring suburb in Andergrove, for example, or Beaconsfield pushes up to $750 per week, then this makes sense to go from $550, $540 right now to $650, right? Because rents will be relative, right? There's still affordability relative to those neighbouring suburbs of $100 less per property. So I think that's going to definitely happen in and around Slade Point. So I think if you're an investor, you could get in and potentially, yes, still get some ongoing rental growth there. I don't think it's necessarily hit a ceiling right now. Median house price currently has grown 11% over the last 12 months, and it currently sits at $515,000 there as well. So I think that median house price is quite a good price point right now. I think there's a lot of affordability in this suburb, and I'm actually quite bullish on Slade Point. Obviously, if you can get a bit closer to the beach, where a lot of the streets around Slade Points that are close to the beach are named after birds. So if you can get on those streets where you get emu, ibis, or whatever on your street, I think you're going to do pretty well there as a property investor. Because I think that median house price at 515, I think that can definitely get to 615 over the next couple of years as well. So I think there's $100,000 to be made here in the short term. So you get plenty of wiggle room in this capital with the median house price, and plenty of wiggle room, I think, with this median rent over the next few years. And then the current yield sits at 5.4% based on what you can get right now in terms of rent, and based on that entry level median house price. So yeah, look, Slade Point, I think out of all of the suburbs we've walked through today, I think this one has the sweet spot right now, where it has the good combination of rents, and the house price entry point is actually quite affordable. So to me, out of the suburbs we've just spoken about, I think this is probably the best one on the list so far, where you can get good capital growth and good cash flow at the same time, and then still can get good capital growth ongoingly and good rental growth ongoingly, I think, for the next 24 months as well. But yeah, Slade Point and Mackay, guys, it's chipping away and done some fantastic figures over the last 12 months. Coming in at number 2 as one of Regional Queensland's most fastest growing suburbs in terms of median rental growth is Campwin Beach. And Campwin Beach is located in the Mackay area. You're most likely looking at about a 40-minute commute from Campwin Beach, and it's located, I would say, southeast of Mackay. I'll probably say it's more closer to Serena and would be classed as a more of a Serena area or suburb as opposed to Mackay. But what's really driving Campwin Beach is what's happening in Mackay as opposed to what's happening in Serena. But yeah, really good lifestyle market. What I find with Campwine Beach is a lot of people that work out in the coal basin around the Mackay region have a tendency to be set up in and around Campwine Beach looking for that rural residential lifestyle close to the beach, quiet little seaside suburb slash town, and they get to sort of unwind there on their days off if they're working sort of lifestyle rosters out on the mine, 7 days off, 7 days on. But it's also those that want to, well, have an alternative option to the northern beaches of Mackay. So a lot of people tend to be based on the northern beaches of Mackay, Dolphin Heads, Slade Point, Bocasia, Blacks Beach, and you got places like Campwin Beach, which offer a great alternative to that, which isn't the north of Mackay, but is on the south corridor of Mackay. So yep, Campwin Beach, guys. Let's dive into that now. Coming in at second place, so we can see here that the median rental price right now for Campwin Beach is $454 per week. And we can see here that over the last 12 months, it's done 18.2% growth, which is enormous, right? And it's essentially grown from $402 per week to now $454, resulting in a total, I suppose, growth figure of $52 per week. So huge amount of growth here, particularly for a little beachside suburb like this. This will be the last suburb I would think to have this sort of rapid rise in median rents, given it's so far out of Mackay. But nonetheless, it's surprised a lot of people, I think, coming in at number 2 here with some huge growth figures. Now we can see here that some of the data looks pretty good still around Campwin Beach. So on average, it takes around 31 days for most things to get a tenant through the door. 31 days, so yeah, pretty much there. You're not leaving too much money on the table there. That's pretty good, particularly for a smaller little suburb like this. 31 days, I think, is quite healthy. We can see here that, given the smaller side of this, given the smaller nature of the suburb, you can see here that it has a relatively low online search rate of 59 unique views per listing. But I wouldn't read too much into that, because if you look at that in relation to how many dwellings are available there each month and how many dwellings are available there in total of 311 dwellings in total, like relative to that figure is actually quite high. It's actually a huge percentage of that when you look at the search to dwelling ratio. We can see here that renters or rental dwellings account for approximately 24% of the total dwellings in Campwin Beach. And as I said before, it only has roughly 311 dwellings. So it's a relatively small suburb. In terms of vacancy rates, currently sitting at 0.3%, and that equates to one property currently on the market for rent. So an extremely tight rental market here, only one listing, and that listing velocity, when I checked it, it's only like 1 to 3 a month. So very tight, and you can certainly see how when you have such low supply levels and still a healthy demand pool, that's going to put upward pressure on those rents, and that's certainly what's happened here in Campwin Beach. Look, coming in at $454 per week, I think if you look at that in comparison to sort of the broader Mackay region, it's actually one of the more affordable suburbs. Like there's still other suburbs around Mackay that are similar in nature but don't offer that beach style living or that close to beach living that Campwin Beach has. So I think a lot of people are gravitating more towards that for a lifestyle option, and given it's affordable, I think it's better. Whereas if you pushed into the northern beaches of Mackay, if you're looking at 422 brick homes close to the beach in North Mackay, you're paying anywhere between $600 to $800 per week, as opposed to $450 per week. So I think a lot of people are pushing into places like Campwin Beach and Serena Beach and things like that as an alternative for the northern beaches because of that affordability piece. And I think it still has a plenty of wiggle room to grow. I think relative to what you could get in town, I think you're looking at probably through $200 to $300 difference in terms of comparableness of those properties in comparison to what you can get here. So I would say Campwin Beach still has $100 to $150 worth of growth left in it in terms of its median house price per week. I think it can certainly keep pushing up. And we can see here that the median house price has grown 11% over the last 12 months as well, and it's currently sitting at $570,000. So not bad overall. Look, I think that's on the upper end of the market there. Like, I would be probably paying two more than that median to go into someone like Campwin Beach, particularly when you can get better value for money. I believe around East Mackay, inner North Mackay, and even some parts of the northern beaches like Slade Point in particular. I'd probably prefer to buy there first before I would look at going into somewhere like Campwin Beach, unless you can get something that has a 4 in front of it, something that around like 450 to 500. And I think there'll still be dwellings like that around Campwin Beach, but that's the ones that I'd be targeting. Whereas, like, if you're buying at 550 now, I can't really see it growing too much. I want to be buying at 450 to 500 to get that growth between 500 and 600,000. So that's what I'd be targeting there. And the yield based on the purchase price, as you can see, like those rents are relatively low and quite affordable. And then you got this median house price of 570, and obviously results in that 4.1% rental yield on average there when you look at the suburbs. So not exactly fantastic on the low end, but I think if you can get that 450 a week and you're buying it around that 450 to 500, or even 470 per week, you're buying between 450 to 500, you're getting around sort of a 5.4, 5.5% yield there, which is slightly better than what you'd be able to get right now if you stuck with a 570 purchase and you got 450 per week. But as I said before, guys, I think Campwin Beach has really taken off because I think it largely driven by the lifestyle market. A lot of people are pushing down into Campwin Beach for that lifestyle amenity. Predominantly was just sort of a quiet little seaside suburb, but now it's starting to really position itself as a good value for money area to rent and to buy. And I think that's why we've seen price movement now and rental movement. But I do think, it's got some wiggle room in the short term. But would I be investing here? I'd probably not. I'd be probably looking at Slade Point as opposed to something like this, or in and around East Mackay, South Mackay, West Mackay before I would look at going this far south of Mackay. All right, taking out the top gong and coming in at number one is a suburb called Toolooa, and Toolooa is located in Gladstone. So we have a suburb in Gladstone that's come in at number one, given that Gladstone's had quite a bad run over the last decade, and only of late it's a market now that's really repositioned itself and has been surging along quite nicely, in fact. So it's good to see a suburb on Gladstone now hit the radar of many property investors and doing some good numbers. And hopefully this video might even entice more people to potentially look at investing in somewhere like Gladstone with this suburb here coming in at number one. So Toolooa, I don't mind the suburb. Look, it's quite centrally located in Gladstone. It actually intersects with Glen Eden and Kinkora, which are some of the more upmarket areas of Gladstone and tend to be more popular with families, and tends to be where a lot of the middle class and upper middle class are clustered. Whereas Toolooa, it's kind of been sort of its forgotten little brother, and I think it's more or less was riddled and clustered with public housing, for a long time, and I think a lot of that was driven by the Queensland government. The Queensland government, when the Southeast Queensland corridor filled up, and they didn't have any vacancies for public housing, they sent a lot of people in Southeast Queensland up to Gladstone, and they ended up in suburbs like Toolooa, and unfortunately to this day they're sort of still lingering around there, and I think that sort of really plagued the suburb from performing. But nonetheless, it looks like it's on the return now and on the up. So if it's coming at number one, and as you can see here, look, it's got a median rent per week at $408 per week. And obviously that's not knocking anyone's socks off. That's not extremely high. That's actually still quite an affordable rent per week. But when you see some of the data as to where it's come from over the last sort of 5 years, you would see that, this market is actually rising a lot in terms of rent, and it's kind of coming off a really low floor. So we can see here that it's grown in total of 18.2% over the last 12 months, from $353 to now $408, resulting in a total growth number of $55 per week. So look, guys, 408, as I said, it's probably not knocking anyone's socks off, but it's done some pretty good numbers over the last 12 months here, growing a total of 55%, considering this is a suburb where predominantly the lower socioeconomic demographic are clustered, and there is quite a high concentration of public housing. But nonetheless, the rents are still rising here, and it's coming off a relatively low base. And I think that's why this has ended up at number one is because it's come off quite a low base, and I think it can still move not only from where it is now, but even to 450 would still be quite affordable to a lot of that lower socioeconomic demographic in Gladstone, because a lot of the suburbs that it intersects with now, with Toolooa, Gleneden, South Gladstone, a lot of those rents now on average are pushing up into that $550, $600 per week. So this is starting to now push up into that $450, $500 per week, I think, over the next sort of 12 to 24 months. I still think Toolooa has minimum $50 per week growth left in it. I think it can get to around that, 500 to 520 per week over the next 24 months. But yeah, nonetheless, it's done, some great numbers. And as you can see here, it's taking on average 20 days now for properties here to be letted, which is good. Going back a couple of years ago, it would take months on end to let a property here, but the market has really picked up now, and Gladstone's really taken a turn, which is fantastic for the area. You can see here it's actually got quite a high online search rate when you look at it in comparison to the amount of dwellings in the suburb. So the next line down has the suburb coming in at 530 dwellings, and you look at that search to dwelling ratio, it's very, very high, and it's actually quite good in relation to sort of some of the other data we're looking at today across the other suburbs, which is really good. So I'm pretty confident there that if you bought an investment property here, you'll get it rented right away, I think. And I think given that it's in quite a good location, it is affordable relative to Gleneden and Konkura, I think you'll be able to fill that property fairly easily as well. As you can see here, 40% of the dwellings in the suburb are investor owned or are available for rent or are rental properties. So look, it's probably slightly higher than what I'd like, around that 30%, but then again, there's still 60% there of the stock owned by investors. So I think you still got a bit of a buffer there to keep some stability in the suburb, but just remember that there's also a concentration of government social housing there as well. So you got the investor owned stock, government housing, then you got the owner occupier market there as well. So look, it's okay. I think it's going to be a stable suburb, but if you drill down and pick the right streets and the right pockets, I think you'll be just fine if you are to buy here. You can see here that the vacancy rates are really low as well, sitting at 0.7%, so only 4 listings in total right now across the suburb. So yeah, really, really tight supply levels here, and that in turn as well is pushing this median rent per week up to what it has over the last 12 months, and that's really what's driving that, is that really tight vacancy rate. And Toolooa is quite a built-up suburb as well, so there isn't really a whole bunch of new supply that can come into the pipeline and spike this vacancy rate up, and that's probably a good thing about it. So the amount of dwellings that are there is pretty much capped. So if this trend remains, I think we're going to continue to see median rental growth in this suburb. And you can see here over the last 12 months, the median house price has grown by 30% as well. So it is a growing market, not only in the form of rents, but the median house price is growing as well. And it's actually still only at $366,000 median. So very, very affordable, very cheap to potentially get into a suburb, particularly if you are someone with like a sub 450 budget and you've been trying to figure out where to buy. This market or this suburb will certainly be able to cater for you, because number one, you got rental growth, and number two, you've got a soaring median house price here as well. And I think that median house price can easily get to 466, 470 in the next 12 months. I think there's still a lot of affordability in this market to make an extra 100 grand if you are looking to invest here. Obviously, you got to pick your apples on a case-by-case basis, and just be mindful that there is a high concentration of public housing there, so just be careful when you're navigating in this suburb. And you can see here that overall, it has a good combination. The rental returns plus the purchase price gives you a nice rental yield of around that 5.7% as well. So no doubt, if you got a little bit more than $400 a week and you're paying around that purchase price, you're getting above 6% yield here for your investment property. But yeah, guys, I think it's got a lot more wiggle room to grow in the short term, both rents and the median house price. So if you haven't looked into Gladstone before, I think this suburb has some potential here, and the data is suggesting that it is a market that's hot right now in terms of rent, and hot right now in terms of how it's performing from a capital growth point of view. There you go, guys. The top 6 suburbs across regional Queensland with the fastest growing rents in the last 12 months. And look, this is in the last 12 months, and obviously this is not a reflection on the suburbs that are going to best perform going forward. No, it's just point in time data that shows that hey, these suburbs are hot right now, and it potentially might give you some clues as to where some of the areas that you should potentially target or put on your investment shortlist. For full transparency, I'm not buying any of these suburbs right now. I do think Regional Queensland offers some better prospects right now in terms of suburbs to invest in, but look, these ones I think would hit the radar very soon as the data continues to move. So yeah, guys, best of luck with your investment journey. But if you are someone that you feel as though you need some help, potentially getting into the marketplace, you need help navigating and shortlisting some of the best suburbs, where to park your money, you want to mitigate a lot of the downside risk, you want to buy an off-market property, you want to get a good deal, then feel free to reach out to me and the team. You can give us a call on that number, visit us on that website, book in a time for a chat, and let's try and map out to see if we can, number one, even add value first, and if we can't add value, try and at least steer in the right direction. But if we can, let's try and get you into the marketplace and get your dollar working for you sooner rather than later. Cheers, guys. Thank you for tuning in again, and I'll see you on the next video.